Hello, my name is Steve Bigelow with the Candlestick Forum. Today would have been one of those nervous days if you didn't use the simple principles of candlestick analysis, which was early this morning, the markets traded well positive. So a lot of people say, well, man, if I'm short, I'm going to cover this. However, a candlestick investor knows that it would have to have closed up here to say the bulls are in control. And even then, they wouldn't be above the T line. This is a process that allows people to be less nervous or less anxious about their positions until they see what the overall market trend is doing. And right now, the assumption still has to be the downtrend remains in progress as long as we don't have a sell or buy signal and a close back up above the T line. Same scenario here on the NASDAQ. You're going to be able to see that on the NASDAQ, all the reports tonight are going to show that it was up 72 points. However, as a candlestick investor, you can see it was selling after the open. But this is still a very bearish indication. This gives you much more accurate analysis of what's going on in the trend. So same scenario on the S&P 500. This is what we call observe the obvious. They came right smack dab to the T line, which nobody has on their charts, and backed off. So even though it was up a little bit today, that's still very bearish. We're still in a downtrend. So you can use that information to say, well, if we're in a downtrend and we can see charts that look bearish, like Roku, failing here at the 200 with a hanging man, shooting star, and then a gap down close below the T line, where do you think the next logical target is going to be? Probably back to the 50. Well, is this the best place to buy puts? If it's just going to this level, this is what we're going to be teaching this weekend. Probably more economical and much more risk reward beneficial to do a put spread. We recommended today in our options room to do a 60-65 put spread at $1.70, because if it comes down through here in the next couple weeks, that $1.70 will go to a $5 level. So there's places where you can buy puts. We know the kicker signal is a very strong bearish signal. That's a good place where it's starting to downtrend. You're buying puts. Right here, looks like it's doing a bearish J-hook pattern, and you're already in the oversold area. That might be where you add on with put spreads to kind of enhance that downtrend, even though you're already in a high risk or a higher risk area. So if we can see a pattern, Bivy did a nice fry pan bottom today, and it continued, implying there's going to be more upside. But the same scenario can be used for a dumpling top. There's your bearish flutter kicker signal telling you the downtrend has started. That's the place to buy puts. Well, if this opened below the 50 tomorrow, telling you the 50 is not holding, that strong downtrend coming out of a dumpling top is in progress. Good place to look at some put spreads at this level. So anytime we can see a high probability trade setup, buying the puts here and doing a possible J-hook pattern if this starts trading lower, again, doing a bearish put spread, where the logic is much more inclined to say, all right, the risk is a little bit higher down here, but a put spread on a very high probability trade, a bearish J-hook, will probably put you in the right place at the right time. So if we were watching this, you could see a bearish signal. If it opened lower, breaking this level, you could be buying puts. Now you could be buying put spreads knowing that this downtrend is in progress. So join us this weekend. We're going to be doing a mini spotlight training at the Candlestick Forum. It's the 2-hour session on Saturday. we're going to go through the best option strategies in a downward market. Always available to everybody. Try our 2-week free trial. You're going to get a lot more information than you expect that you'll probably be using for the rest of your life. That'll be it. We'll see you in the chat rooms.